Hi, what's up, guys? Today, May 17th, 2024, I'm going to go over Microsoft one trade done. Super small size, but win is a win. I'm going to try to make this quick because I got some shit I got to do. So, Microsoft, why I took Microsoft. Microsoft's always on my main watch list up here in the top left. Apple, Microsoft, SPY, Qs. And then I have this watch list down here where I had Intel and Amazon. But I had no plans on taking Microsoft. If you go to the 30-minute, there is absolutely no trend at the time, right? This is the 30-minute, this is the hourly. There's no fucking trend. There's nothing. Why would you ever want to trade this, right? Especially in the hourly, we're kind of inside of this ribbon, inside of this green wave. And we have support below. Right here we have the multi-day call trigger, the weekly call trigger, which I'll get into and show you why these levels work so well. First, I had a lot of people DM me about the indicators. The indicators are absolutely free. I'm going to link them down below. They're not made by me. All of the creators' socials will be on the website and stuff. So if you want to go download them, Thinkorswim, TradingView, they're absolutely free. And you can go watch the videos on them. And yeah, if you want to trade like this. So Microsoft rejects call trigger at open, daily call trigger, bounces off put trigger. In the few years I've been trading this, in the few years at these levels I've been out, that usually indicates chop. It usually indicates, we're going to stay in a boring price range and a shitty price range, which is fine. It's option expiration today. It's OPEX, and there's no reason to even be forcing a trade anyways, which is fine. But what interests me is we bounce off the put trigger now and we form this kind of bear flag on the 3-minute, right? You could see price starts to do this, and on the 1-minute it's nice, kind of like a box, right? Like we kind of like price is trapped in this box, and when it breaks out, it's gonna fall through. So since I was trading the 3-minute, I'll go back to the 3-minute. You could see I like to draw support and resistance on candle bodies instead of wicks, unless it's like a higher time frame. I like the bodies because it's easier. Look, you can even see here like how it respects it later on, right? We end up rejecting this level again. It's easier than trying to catch the wicks, right? And it gives you kind of a clear reversal spot. So you can see here, I had this drawn and then I had this drawn down. And what happens is we get back down here and we start breaking the trend line and the put trigger. And then obviously low of day. Usually if that falls out, we'll get a nice little sell. And that's how you can capitalize on 0 dates. Now, I was sized super small just because of OPEX, and Microsoft really had no trend, and it's 0 dates, and it's not on an index, right? It's just Microsoft. So size super small, but still a really good win. So we start to break this trend line here, and I'll show you an example on the 1-minute too, but we start to break this trend line. And remember, like I said in the last video, price kind of just chops right here in this 7-cent range. Like it just chops, but it doesn't break back above the trend line, which is super important. So as soon as we got a little bit of selling, I entered the puts. I'm going to put it up on the screen right now. Entered the puts at 0.55 in this same candle. They're up 10%. Now I really suggest when you start to get up 5-10%, you adjust your stop. If your stop is 20%, which is mine, I'll adjust it to 10, right? And that's super important because if something reverses against you, you're going to lose 10% instead of 20. But that's just my method. Don't copy me or you'll die. And you can see here, next candle opens up, retest the trend line and the put trigger. Now they were down about 7%, and I was ready to cut and just kind of walk away with a super small loss and go do something else. But I held on, and we get that nice sell. You could see the volume stack is like 98% red. It's super small. I hate it, but no diddy. We get that sell off, boom, straight into the fib. We bounce off the fib, super bullish close. This was also bullish because all this volume, all the buying volume came in like the last minute of this 3-minute candle. So it was kind of indicating that it wants to probably reverse, go up, and that's exactly what it does. It retraces all the way back into the 10-minute cloud, which is this, all this jagged lines, retraces all the way into it. And yeah, so let me show you on the 1 minute real quick how well it respected these levels. Look, you can see we broke below it, started testing, boom, 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 and we never broke back above the put trigger, and then we just get that sell, and that's 60%, right? I mean, it doesn't even matter what size you're trading. If you had one contract, that's a great trade. That's, someone's daily goal. Now the reason why I didn't want to enter is because look at how well we've respected this call trigger all day. This is a huge level for Microsoft, huge demand zone. People, every time we get down here, people are buying for whatever reason. Huge level down here. So I don't like trading into that. I like trading the path of least resistance. That's what John Carter says. And that's how you're going to make the most money. But yeah, just a one and done trade. Super simple. You can see here, I have the contracts here. And so entered 648 at 0.55 to 0.9 in about 9 minutes. So 63% at the peak. And yeah, that's basically it. I'm sorry if this is super quick. I got things I need to go do, but I'm going to put out a weekly watch list on Sunday, hopefully during the day, but if not, it'll be at night. And yeah, if anyone obviously has any questions or anything, DM me, Discord, Twitter, comment down below. I see all of it, so I'll definitely respond to you. And yeah, that's about it. I hope everyone has a good weekend, and I'll be back with another trade recap, hopefully on Monday.